Good morning. Today is Tuesday, January 17th, 2023. I'm Jared Hall giving you a look at the week ahead in terms of what is impacting financial markets. Last week, we saw the S&P 500 index increase by 2.7% as investors became more optimistic about the Federal Reserve potentially slowing their rate hike pace. This was due to data indicating a decrease in the U.S. CPI in the U.S. during the previous month of December. Last week's price action puts the index into some tough resistance, meaning areas where we could see the upward price action stall. The market's uptrend was fueled by expectations that the FOMC will only raise the central bank's key lending rate by 25 bips at their upcoming meeting, which is less than the 50 bips increase made in December and the 75 basis point increase made at the previous meeting. Their next meeting takes place January 31st. Despite the encouraging news, investors remain concerned that the necessary level of rate increases to control inflation, which is currently above the Fed's 2% target. This concern was highlighted on Friday as several large banks announced they are setting aside funds to prepare for a potential recession. This week's market is trading in a holiday-shortened week, closed Monday for Martin Luther King Day. In our last video, the week ahead, we noted that we were watching earnings of companies that make up the S&P 500, noting a slight decline in earnings is probably already priced in, but that a harsh decline could add pressure on the index. As companies begin to announce their fourth quarter earnings in the coming weeks, the estimate currently is for a 3.9% year-over-year decline, according to FactSet. This could mark the first year-over-year decline in earnings reported by the index since a 5.7% drop in the third quarter of 2020 during the pandemic. Because we think earnings will be relatively flat or down slightly this year, it has us searching for value in this market and yield, as we think that these two things could play a necessary part in generating returns this year. Thanks for watching and stay tuned for next week's video.